One of the things that I've been talking about is that we were going to be in an obvious monetary crisis within a couple of years. It was already started.
But that's why I said this eventually will be worse than our Great Depression, because so much more people are going to be impacted by it and all. It starts with our own individual life. Forget what the guy down the street is doing. Forget what the government should be doing and is not doing. Put your own house in order first.
I'm very pleased to welcome back two fan favorites of the show, Peter Grandich and Michael Campbell. Peter, of course, is the founder of Peter Grandich Co, and Michael Campbell is a famous talk show host. He's the host of the Michael Campbell's MoneyTalks podcast. We can check him out in the links down below. Both of their interviews have done extraordinarily well on my channel. You can check out our prior conversations, again, in the description down below. We're going to be talking about the outlook for the economy, changes that should be made to bring prosperity to all, and the asset classes that both Michael and Peter like today. Bring in also a Canadian perspective. Thank you very much for joining us, both of you.
Real pleasure to be here, especially with Michael there as well.
Yes. Michael, great to see you again. Peter, let's start with you. You're based in the U.S., and Michael and I are both in B.C. U.S. news came out today with jobs looking weaker than what was expected. Non-farm payroll growth revised down by 818,000, says the Labor Department. This is significant because the BLS reported that the actual job growth was nearly 30% less than initially reported. This is the most significant downward revision since 2009. And so I'm looking at the markets today. Not a lot has changed, and the CME Fed Watch tool hasn't really changed much either. We're currently looking at a 67% chance of a 25 basis point cut and a 30% chance of a 50 basis point cut by September. So basically a 100% chance of a pivot, but the probability of a 50 basis point cut hasn't really moved up on today's news. But anyway, how are you interpreting this downward revision, Peter?
So I, along with others, I certainly wasn't alone in this, have been writing for months about that the BLS should just drop the L and call it BS, because anybody who was looking at these numbers when it was compared to either the household survey, which is a much more candid and fair survey, or the ADP survey, which really had no personal axe to grind, would be so different. And sure enough, the drop you talked about and the number that you used is startling. It's 30% off. First of all, I don't think you can keep your job at any place where your thing is to guess numbers and constantly be 30% off. But David, the big story in this is the Federal Reserve, which was supposed to be making planning based on these employment numbers, certainly has to be concerned that the economy now, even though many of us felt wasn't anywhere as strong as it was. And of course, now that'll lead to more talk of easing and all, but I think it's a very bad sign when one of the more important statistics cannot be relied on and could be off by so much. I mean, you're talking about almost by a third. 2 or 3%, okay, but not a third.
Michael, the labor market in the U.S., how would you rate it? Scale of 1 to 10, 10 being booming, 0 being dismal in a depression?
Well, I think as Peter alluded to, but we've seen consistent reassessment of the market. It seems to be always weaker than what they report. And as Peter says, that's the key component, that they say their job is, employment and inflation. So, not a surprise that we're seeing more pressure built up for that lowering rate. I think, again, this measure of recession is always a bit problematic for me, because I'm not sure it matters to anyone if you say, well, you lost your job, but it's okay, we weren't in a recession. No, I mean, when it drills down to the individual, they look at their circumstances. But I think it's getting more and more evidence supporting that they're in a recession, in a downturn, and then all of the implications, for example, in things like government revenues go down. But they can't afford to have government revenues go down with the size of the deficit and the size of the interest payments on the deficit. So it's a serious change. And I have to echo what you and Peter just said. My goodness, 30%. Are you kidding me? I could have guessed without knowing anything, just thrown a dartboard. And that should reduce people's confidence.
The Fed's still looking at inflation, though. And so, to my knowledge, the inflation numbers haven't been revised. But yes, the labor market now looks weaker than what was previously anticipated. What do you think, then, is going to happen with monetary policy, not just in September, but going into 2025? How many rate cuts can we expect? I'll let Peter answer this front first.
So in regards to that inflation, it's certainly lower than what was being reported just several months ago, but I still find it hard to believe with all our clients in the US that are business owners continue to tell me whether it's for food, materials, or what have you, it may not be going up as much, but it's still going up more than 2 or 0.3% a month of what the Fed is now, government is telling us. But I think that what you have now is you have room clearly for a September cut. That's clearly coming. They don't have to worry about any accusation of political favoritism because this discrepancy in employment gives them room. It's really going to come when we get in January or February, and I can't remember exactly which month. They revise it one more time. I suspect there'll be over 1 million by then, that it was even worse off. And this is going to give cause, and this is maybe obviously not our job to discuss it, but it's something they need to look at. One of the main reasons for this discrepancy, and they seem to miss it a lot, is they're mysterious because they're the only one that knows the figures of this birth death model that they have. And with declining births all around the world as a major part of demographics, I think they're going to have to go and look and maybe start to adjust their model. I think that if they didn't do this on purpose, if it was accidental, then they need to really reshape their model because this is too big of a discrepancy for governments and especially the Federal Reserve to work off of.
Before we continue with the video, let me tell you about how to protect your online privacy. Do you know how much of your personal information is on the internet? Well, data brokers collect and sell your personal data, exposing you to risks like identity theft and potentially harassment. But there is a solution. Delete Me, the sponsor of this video. Delete Me removes your personal information from hundreds of data broker websites. I use Delete Me myself, and it's simple. Just submit your information, and their privacy experts handle the rest. In 7 days, you'll receive a privacy report showing where your data was found and removed. Delete Me continuously monitors and removes your information all year long. Now, get 20% off on consumer plans with Delete Me. Go to joindeleteme.com/David Lin and use the promo code David Lin at checkout. You can also scan the QR code on the screen here directly from your phone. Join the thousands who trust Delete Me to keep your data private. Get Delete Me today and start taking control of your online privacy. Michael, you mentioned that we're possibly in a recession already based on how bad the labor numbers look. However, the stock markets don't seem to agree with that stance. The U.S. stock markets continue to grind higher even after the big drop on August 5th. Even in Canada, the TSX today at 23,000 points rather, is a new all-time high. Why is it that the stock markets don't seem to think that the economy is slowing down, or at least it's not reflecting that?
I think that's the whatever $64 trillion question is people sit back and guess why people are buying and why people are selling. What I think it also reflects was how much money's in the system. That there's a phenomenal amount of money that has been pumped into the system. It's got to go somewhere. And right now, maybe people could jump into the U.S. bonds if they think rates are going down, so they got a price appreciation. I'm not so sure. They don't show any numbers that they're piling into real estate, that's for sure. Central banks, especially in the eastern part of the world, are going into gold, but I don't think there's a huge move in the Western, central banks for gold. So I think it's just as simply a case is where is money going? The momentum is still there, but I'd be one of those people going back to 2 weeks ago when we see how fast things can change. I think there's a caution flag out there for sure. I don't think the valuations on some stocks, and I mean, we've had this huge discrepancy between these high techs, NVIDIA being the poster child for that, but Microsoft and Alphabet, their valuations are getting very lofty. The story is very, very expensive right now. So my sort of takeaway from that is I do think people have to be very clear on what risk they're taking. Can they afford it? Did they enjoy that drop 2 weeks ago? No. So again, I just think, it's part of that overvaluation. I don't think that'll last forever.
Just to follow up on that, Michael, so to your point about where is the money flowing, this is an article from the Financial Times released earlier today. Nearly $90 billion pours into the U.S. money market funds ahead of expected rate cuts. It's reported here. Almost $90 billion poured into money market funds the first half of August as investors sought to lock in attractive yields that could outlast an expected interest rate cut by the Federal Reserve next month. Money market funds, which hold cash and short-term dated assets, including government debt, holding a net inflow of $88.2 billion between August 1st and August 15th, according to Flow Tracker EPFR. This is the highest figure in the first half of the month since November last year. What do you make of this movement? People going into bonds?
Yeah, and I think that, again, they're making a bet that interest rates are going to decline, what Peter and I were just discussing, how many times. But of course, if I can lock in at 5, when rates drop, if I've got a short-term T-bill, I'm making money, or even a 5-year. We'll see how the long-term reflects that, what you've just alluded to. But yeah, I mean, it makes perfect sense. If you think rates are going down, lock in at the higher rate. And again, I'm not suggesting people do it on the longer term. I don't have a problem if they're short term on that and it's just a cash equivalent. But yeah, I'm not surprised that's happening at all.
What would you do with your investments ahead of a Fed pivot, historic Fed pivot?
I think as much as you can talk about the Fed pivot, and I don't want to go off where you like to head, David, but I think far more concerns is what happens politically is going to have more of an influence on what happens economically than whatever the Fed may do in September or over the next few months. Who wins the election and how it's won, meaning is there support both in Congress and Senate for the same party, or is it going to be a split or what have you? I think that goes a long, long way. And it doesn't take into account, I got to bring it up, David. It's been my pet peeve, and it's been something I've spoken about for 2 years now, is that the United States, and I don't know Canada's view on it, I don't follow it enough. Michael can answer to that, is not appreciation of what is happening with the formation of these countries into this BRICS organization. We're now looking at over 50 now wanting to be formally part of it, and as many of that informally exploring that. And the repercussions of that, which I can't seem to get anybody in the don't worry, be happy crowd on Wall Street to discuss, is if 50 to 100 countries end up trading more with themselves versus with us, and possibly not use our currency and use either a new currency or use theirs in a combination with gold, how does that end up positive for the United States? I know it doesn't. I'm being somewhat sarcastic. That's the story that, David, you're not covering now, but by this time next year, that's going to be affluent, because I believe we're going to learn a lot from the BRICS this fall, and people are going to finally wake up to this is something very formidable. And let me just close with this. I believe when it's all said and done, it will have the same influence on world commerce as the Industrial Revolution did.
Wow. Okay. Michael, I'll just let you respond to that before we move on.
Well, a couple of things. One of the things that I've been talking about for since that September 16th, 2019, was that we were going to be in an obvious monetary crisis within a couple of years. It was already started, but we would come to accept it's a monetary crisis. And what we're seeing is that sort of flexibility. It's interesting talking from Canada, because the federal Liberal government, when they confiscated bank accounts during the without any charges, without someone breaking the law, seems like one of those small anecdotal events, they did of anybody who supported what we called the truckers convoy, that arrived or against some of the COVID restrictions, et cetera. Well, the government actually confiscated their money. At the same time, we had Russian assets frozen that were sitting in, Western countries. Well, to me, that was just going to be a huge incentive to look to another system. And I think what Peter's describing, I think it's a long-term thing. If I had to give you some dates, I'd say, the US dollar's peak for me is going to be about 2028. We get lots of gyrations in between, right through to about 2032. And I think we end up with a new monetary system, which sounds kind of crazy talk, but I'd invite people to think of the level of change we've been asked to accept already. So, I think what Peter's alluding to is a serious problem for the U.S., because the U.S. gets such advantage of being the world's reserve currency. I don't think that changes overnight, but what Peter's describing is some evidence that it's going in a different direction. And I think that would evolve over a number of years. But come on, China and Russia don't want to be beholden to the U.S. Federal Reserve currency policy. Japan has just broken away in its own way. I mean, we should notice that they depreciated the yen about 35%. If it wasn't sort of an allied nation, I think we'd be reading a lot more about that. So to me, it's all about these currency changes.
David, let me add one more quick thing, because this is important to what we just discussed. these groups have already formally discussed a different system other than the current SWIFT system that the Western world uses. What was the icing on the cake for these countries and why so many now are interested in using that system is not only did we freeze Russian assets, but we've now taken the interest that they've earned and given it to Ukraine. And you have to be asking yourself in any of those countries, what's to stop them from ever doing that to us?
Yeah.
That was the straw that broke the camel back. When history looks back and all, that's when people will realize that that type of move. And by the way, that goes back to the political thing. I believe Donald Trump, and I know as soon as you say Trump, half the people get like hysterical, but Donald Trump will have a completely different view on this than Harris, because Harris will just be a continuation of whoever was behind the Biden administration. So the political importance is not only here in North America for the world's two biggest trading partners at one time, Canada, US, but it's worldwide now on what happens in our political election. Geopolitics is going to be impacted just as much as politics will be from this coming election.
Well, what they could do, Peter, not so much confiscate money, but they could just default on U.S. debt, and not pay the U.S. back. That could have ramifications of its own, but
Yeah, but David, that's one of the main reasons the biggest sellers of U.S. debt over the last several years are those countries, Russia, China. More and more of the U.S. debt, which grows larger and larger, is being funded internally now, not from outside sources. And that also makes more pressure on the U.S. if we turn down and have a weak economy. So anybody that just thinks interest rates are just going to go back to 2%, inflation is going to be 0 or 1 or 2%, doesn't understand how impactings of these monetary systems and changes in the world, as Michael alluded to, because we got away with it, the dollar being the world reserve currency, as that dissipates, inflationary pressures will return to the United States because of that.
Peter, I'd like to get Michael's response to what you told me a few months ago. You were on the show earlier this year, and you told me about the 5 factors needed to build a financial arc. Can you just rehash what they are? And I'd like to get Michael's response.
One has been around for as long as Michael and I have known each other. It's only gotten worse, and that's the debt and deficits. It's just grown exponentially. To think about, probably when I first met Mike, we were probably around 5 trillion in debt, and we thought going to 10 was going to be a lot. The debt and deficits is number one. Number two is the retirement crisis, and I believe Canada may have one as well. But with that is an aging crisis as well, and a battle of ages because of demographics. The boomers losing political clout because there'll be less of us, the money shifting to youngers. The third is the immigration, and I just look at it from the cost economically. The fourth is what I've already talked about, the BRICS. And then the fifth is the political paralysis. Here in the U.S., the two parties can't even go in a room together now. So you cannot expect that if we have another terrible economic crisis, that these folks are going to be able to go in the room. And not only can they not go in the room, but each of them have a splintering now from their middle. For the Democrats, they're moving more hard left, and the Republicans are moving right. But my dear friends there in Canada will probably say that they have some issues, because I believe if we both traded our leaders, we each think we got the short end of the stick.
Okay, Michael, so debt, retirement crisis, immigration, BRICS, and the political divide, which of these are the most serious issue or issues facing the economy? Or just, the country? Yeah.
I think it's going to be the debt. I mean, it's the financial system is going to reveal that. What I found fascinating is you've just finished the Democratic Party convention, you finished the Republican. Neither a candidate is talking about this massive problem of 122% debt to GDP, or we could talk about the amount of money that is going to support interest. So I think it's now already at 75%. Income tax revenue in the States goes just to pay interest. It's going to move to 100%. The entitlement problem isn't even on the radar. So I get asked all the time, if I bring that up, they say, well, how are they going to solve it? And my point to them is they are not going to solve it. They have no interest, no appetite for solving it. So then the real question for individuals becomes, what's the ramification of the consequences to that? And that's my biggest theme, is they're going to, they're not going to be totally successful in being smooth, but they are going to print up the money. The Federal Reserve, at least 5 times I've counted since that September 16, 2019, has entered the market, created a lot of the cash, et cetera. Well, that's what's going to be happening. So it's really the problem for individuals. It's the old Alan Greenspan line when they asked him if you're going to get Social Security. He says, yeah, I got good news and bad news. The good news, you get the money, and bad news is you'll be able to buy a cup of coffee with it. And what I've been surprised at is the degree to which in the mainstream conversation, we've experienced what we call inflation, or the public calls inflation. And they haven't noticed that the buying power of your currency has been devastated. And then I don't have to go further than the euro. You don't have to go into a third world country that we're kind of more familiar with if the decimation of their purchasing power of the currency. So that's the biggest one for me. It's going to impact individuals. They're going to have to make changes somewhere to meet those obligations of entitlements, the pay-as-you-go entitlements. They've got debt obligations that are, continue to escalate. I don't think there's a default in the debt coming. I think there's a default on the buying power of the currency coming. At least that's what they've shown us. And they showed that in the UK with the British pension crisis. Oh, Bank of England comes in with billions to support them. Japan's been a running commentary on that. So I think that's the message individuals have to take away. You must protect yourself, because I think those things are inevitable. They're not solving them.
Well, why do we have to protect ourselves, Michael? What's going to happen to our wealth once, just practically speaking, what will happen to our wealth once the debt to GDP increases above 120%?
Well, I would say it already has, and it's a continuation of the process. So, for example, I think in the States in the last 4 years, your dollar buys only 77 cents worth of goods now that it did just 4 years ago. And if you go even further back, you find out how your dollar doesn't buy much at all. And in Canada, it's a very similar story. I did some numbers and this is with the official inflation rate. Wait till those statistics, remember, have been adjusted and manipulated, but let's take them at face value. So if I've got a dollar today, it buys 54 cents worth of goods it did in 2020. We're already feeling it, but people may describe it differently. Like my 100,000, I remember, I am old enough, but I remember a family member bought $100,000 house. And I said, who the hell's got money like that to buy a house? And we're sitting in Vancouver, is the most expensive housing market particularly in North America. That's how you're already feeling it. And think about the people. One of the things I've had a problem with, sorry, I can go on, but one more point.
Sure.
That I've had a real problem with is who has been infected the most in the last 4 years, let's say, with government policy. Well, every time they initiate a poor policy, it's people at the lower end of the income scale who suffer. In Canada, the federal government talks nonstop about the middle class, who they've hurt. They don't ever talk about poor people. And now we know that in Canada, as I said, the StatsCan just came out with this: 45% of Canadians are feeling the extreme financial heat, with 23% thinking of a food bank. And there's other stats that absolutely mirror that. In the States, it's the huge percentage of people who can't get $1,000 together. That's a group who suffered. We had asset inflation. Oh, that's a big check mark if I own stocks and a house. But think of the percentage of people who do not own those things. And that's who inflation has really hurt the most. But again, so I can say protect yourself from the declining purchasing power, but huge percentage of the population can't. They don't have the money to do that.
That is an excellent point, Peter. What do we do? What is this financial arc? To Michael's point, not everybody can buy financial assets that'll inevitably go up once you print more money and inject more liquidity into the system. Stocks will go up, real estate will go up, gold will go up. You buy those things, presumably you're okay. But to Michael's point, most of us can't do that. What do we do then?
Well, first, I think you have to recognize another part to answer your question was governments can only do two things. They can raise taxes or they cut services. And obviously, both those things are going to continue in a bigger way. As we speak, the Democrats are talking about what is really preposterous, but may actually occur eventually down the road, and that is taxing unrealized capital gains. When you have trillions of dollars of deficits, the money has to come from somewhere. So one thing you need to prepare for is you're going to have a lot less government service, and you're going to have a lot more taxes and fees, even more than you think that you're paying now. it goes back to a philosophy, David, that I implore in our planning group here. And it's been at least half of my 40-year career. And Michael knows it. I've always stated that less is more. We have to start to learn to live less, not chase more stuff. Uh, there's a there's a poster child for what's wrong, even though they didn't do anything to cause it, but they are the clear poster child for what's wrong, and that's public storage facilities. Mostly in North America and even major Canadian cities, you don't have to drive many miles, and every few miles you see these public storage facilities. And while some businesses use them and so forth, they're still used in part to keep excess stuff there. We had smaller dwellings, our parents, much smaller. We didn't have all this stuff. So one of the things we can start to do, whether or not we have lots of money to invest or invest in gold or whatever, is start to live more within our means. David, 7 out of 10 families I still see at all levels, including the athletes I used to deal with, are living at least 1 to 2 financial levels above their finances. And everybody's, well, how do they do that? Credit card. Credit cards. Michael brought up a good point. The bottom 50%, half of America's wage earners, the lowest 50%, almost half of them now are using credit cards just to pay for gas, food, rent, electrical bill. And once you start, it's like worse than loan shark. And if you keep meeting minimums on your credit cards, you never get out from that and all. And part of the things for those that may not be as dire as they are at this point is to make sure you start to live in positive cash flow. I sit with people that have never put down what they spend as a family and budget. And, you know, the United States gets away with murder. We don't have to fund our unfunded liabilities as a government. As Michael said, we're not even counting what's going to be expected for Medicare, Social Security, Medicaid. But as a business owner, I have to. Well, if I have to be that responsible, I need to start with my responsibility at home, because the government is only going to be able to do 2 things, and they will not act even remotely to what would be necessary until there's a calamity where everybody's. That's why I said this eventually will be worse than our Great Depression, because so much more people are going to be impacted by it and all. But it starts at home, David. It starts with our own individual life. Forget what the guy down the street is doing. Forget what the government should be doing and is not doing. Put your own house in order first.
Michael, I'd like to get your take on this from the Canadian perspective. I'm not old enough to answer my own question, but I'd like to ask you, do you think the living standards in Canada, where we both residing currently, have changed, either improved or deteriorated over the last 40, 50 years?
Let me borrow what Peter just said. Our living standards are supported by debt. We have the record consumer debt, right now. So I can raise my living standard by just simply borrowing and borrowing. The key is there going to be sort of a reckoning for that approach? And, that's what the central banks have worried about. And we've seen that, by the way, with the sharp rise in rates. Yes, they've calmed down a little bit. But in Canada, for example, a big difference between Canada and the States is in the States, you have 30-year mortgages. That doesn't exist in Canada. People are a huge percentage, like over 90% are in 5-year mortgages. So everyone who took out their mortgage in 2019, 2020, maybe best still in the fall of 2020, you're in there under 2%. Now you're going to renew even after this decline at 4.5%. And if there's even a few more, you're still going to be renewing at a much higher level in terms of monthly payments. So we've already seen people reporting to a huge number of surveys confirming the same, that they've changed their choices. They may be not vacation. Discretionary spending is changing. We even know that when they go to the grocery store, maybe they don't buy that cut of meat anymore. Whatever it is, lifestyle is already changing. And in the States, it's of course, you have 50 states. So it's a different system. But our healthcare system, for example, is already deteriorating. The people your age who don't need the healthcare system aren't going to get anything near the healthcare system I grew up through, that I got into my 50s with and my 60s with, when you start calling on the healthcare system. You're seeing that all across government services, because it just simply is not affordable what they've done. And the Democrats and the federal liberal government in Canada are very similar in their approaches. I'll just leave you with one thing. They both ran on the same campaign slogan, for goodness sakes, in 2020 in the States, 2021 in Canada. Both of them, never seen this before, literally had the same words: build back better. And that was a recipe for more government, as a recipe for more debt. And that's inevitably led already, and more so when you listen to the Democratic Convention, you listen to the Liberals and what they've done recently in Canada, to higher taxes. And they can rationalize it all they want. So the standard of living is absolutely, that's what concerns me. It's absolutely under attack right now, as I say, already crushing lower income, but it's moved well into the middle income. I mean, there's no government policy that's going to impact Bill Gates' lifestyle. Sorry, Bill, but I'm using you as the cliche. But there's plenty of government policies that have already devastated, whether people make that connection or not. Sorry, I'm going on and on. I warned you guys I could. Peter knows that. But one of his other 5 points, immigration. So Canada's experienced record immigration, but especially record temporary visas. The government, Prime Minister himself called it out of control, and he was right. Well, look what that's done to rents in Canada. Look what it's done to so-called affordable housing, which basically doesn't exist anymore. It's a direct result. So people, who are in their 30s and 40s, they can't afford a house in this country. There's no math that makes it affordable. They're paying the highest rents they ever have. So we are already experiencing a decline in people's standard of living.
I know Michael just gave an answer, but I do have one follow-up question from Michael before we move on to Peter to get his reaction. So this is a poll. This is an article from the Financial Post, dated earlier this year. Data show a strong economy, but Canadians say they are worse off in their day-to-day lives, according to this poll. Despite forecasts for stronger than expected growth in early 2024, a majority of Canadians don't like where the economy is headed. 2/3 of Canadians believe the economy is on the wrong track. Maru Public Opinion found in its March survey. Most Albertans were the most concerned about the economy, but across the board, every single province had the majority of respondents. I guess if you're unhappy, you're going to respond to this poll. If everything's good, you're not going to bother. But I guess there's some bias there. But the point remains: what can be done to improve the economy so that people are happier?
Let me just respond first to the part. Look, when they ask about recessions, I've said this for years. I can't find, if I go out in the street and I said, gee, you're worried about recession. Nobody is. They're worried about their own personal standard of living. So we've got many people living in their personal recessions right now. So why do they answer that way? An economist comes and says, I looked at all the big picture. People don't live in the big picture. They live in their own circumstances. So what have they seen is that prices have risen, like prices like food. It's very similar in the States. Since 2021 are up 24% in Canada. Well, they know their wages sure as heck didn't do that. So that's an example. So they feel worse about it. Well, practically, it's not just a feeling. It's they can measure it. So people answer those questions that way because their personal circumstances are worse, as opposed to whatever. But by the way, Bank of Canada has made very clear that Canada's in recessionary pressure, very much like the U.S. The economy, they may have been brighter in the beginning of the year, but it sure wasn't going through the second and third quarters. And so what can they do about it? Well, first of all, in Canada, and I think this is consistent after listening to the Democratic Convention, the priority isn't economic growth. They have other priorities, and then voters get the right to choose which ones they want. So in Canada, the Liberal government has been more concerned with climate change, and they're willing to sacrifice economic growth on that behalf. So it's no wonder that on so many economic measures, Canada has performed poorly. And so you first have to change and say the economy is important. I mean, I'm always astounded, that people don't get that their own personal standard of living starts with the economy. But yeah, it's not been a priority in this country, and I think we've lived it when we look at things like GDP per capita. You look at some of these measures about how individuals feel, that kind of thing. And in the States, it's a little different again because statewide policy plays such a huge part. But I think it's fair to say when you see President Biden and VP and nominee Harris is wanting to significantly raise capital gains. That is, no one can argue that, that's good for the economy. That'll be good for business investment. Several of their policies have actually been jaw-dropping for me. When they talk about price gouging, well, they don't give any definition of it. Where did it happen? Was it part of the supply chain? Are you talking about retailers? All across the board. So yeah, I think there's a real challenge when you've got governments who don't think economic growth is a priority against a backdrop of record debt.
Okay, Peter. Yes, Kamala Harris wants to not just raise perhaps taxes on capital gains, but corporate taxes as well. Just 2 days ago, it was reported that she said she wants to raise the corporate tax rate to 28%, currently at 21%. This was on her campaign trail on Monday. This would effectively roll back a lot of the Trump tax cuts. Now, she also, to Michael's point, she also wants to fix price gouging. But let's talk about the tax aspect. See, first, if she wins, corporate taxes go up. What's that going to do to the stock market?
Well, first of all, I have to commend Michael. He actually says he actually watched the Democratic National Convention. That's why he's so up on stuff that I'm not. Listen, the stock market that I entered 40 years ago was greatly driven by economic factors. 90% of the trading was individuals buying stocks to be part owners of businesses. And the economy, what it did, had a direct, almost immediate impact on the stock market. Now, over half the capital in the U.S. is in passive funds. They're not being actively managed. They're either in funds that are tracing a particular index or a group or a sector, and the manager, he or she, is not making any changes in that unless the index itself isn't being matched by the performance of the fund. The other half of the money, almost 80% of that, is in some algorithm trading program. Could be as simple as just wording in news releases and certain moves are made, or very complicated involving futures, stocks, and everything. Maybe 20% of the money in the market is still people trying to buy and sell. I want to be part owner. Apple, no, today I don't want to be at all. So the economy, believe it or not, doesn't have as much of an impact on a daily basis, in my opinion, as it did 30 or 40 years ago. So if it's not, then you have to look at, okay, what's going to impact those people that I just described, if I'm right, who are the key players and influencing price? Well, the passive people are, as long as the market's not going down, basically, they're going to be okay because most people are long in those type of investments. The other people, the computers, and what we've seen, only a short little bit of it is, we've seen they can easily go bearish as they could bullish, even though the tendency as investors is to be bullish. David, I have to say this to you. I love you, buddy. So let me say this to you. If you don't know the game of craps where they play dice in the casino, just one weekend when you got some time, just go watch the game. You'll see that 8 or 9 out of 10 people that approach that table will bet on the thrower, or what they know as the pass line. Very few people will bet on the don't pass line. But statistically, they have no real difference. You basically have the same odds whether you're playing. But what's real interesting, as most people are playing the passer, if you came over and played the opposite, they want to kill you. It's like you shot them. We have a whole generation now that thinks just on the pass line. We have financial service people who learned that basically the market just goes up. And by the way, if there is a problem, the Fed comes in. It's commonly known as the Fed put. So right now we have markets that are thinking more away from general economics that used to be the main driver. Now, I had to say that to you because to answer your question properly, I will tell you that corporations have never shown, just like the public, the higher tax leads to more benefit of growth. It stalls growth. It unstimulates what normally stimulates. I wasn't a big fan of the Trump cuts because he did it on the basis that he thought the GDP could grow at 4% and that would make up for the lost income. He might have ended up being right, but COVID came along and we'll never know that is the case. I can tell you this. Taxes can only go up going forward, both for corporations and people, and services are going to go down. They have to, when you're running 2 to 3 trillion, it's still, Michael, it's still hard for me to say this, $2 to $3 trillion a year just in deficits. We have to make up for it somewhere. So whether it's not Kamala Harris and whether Trump wins, eventually both Democrats and Republicans are going to have to raise taxes a lot and cut lots of services.
The Americans are running Canada's GDP every year in deficits, just to put that in perspective. Okay, you both brought up price gouging. I have to share this clip with you. This is Kamala Harris talking about price gouging and what she's going to do. Just take a listen. It's about 50 seconds long.
We believe in a future where we lower the cost of living for America's families so that they have a chance not just to get by, but to get ahead. Because while our economy is doing well by many measures, prices for everyday things like groceries are still too high. You know it and I know it. You know, when I was Attorney General, I went after price-fixing schemes. And when I am president, it will be a day one priority to fight to bring down prices. I will take on big corporations that engage in illegal price gouging. I will take on corporate landlords that unfairly raise rents on working families. I will take on big pharma and cap the cost of prescription drugs for all Americans. And continue to bring manufacturing jobs back to America.
Okay, well, that's something she agrees with Trump on, bringing manufacturing jobs back to America. But let's talk about the price gouging first. She wants to take the fight to large corporations. I don't know what that means. I'll let you answer that. She wants to put a cap on what she said was prices of drugs. Okay, would that fix the problem of inflation?
Well, first of all, I mean, those are just such populist pandering. You know, I mean, first of all, she's been in power for what, 3.5 years or whatever it is now. Are you kidding? You mean you could have solved that and you did nothing? You know, it just defies any kind of rationale. For example, okay, let's talk groceries. So groceries is a huge, a complex sort of supply chain, you know. So, and the other thing, sorry, I don't want to forget to say this. Isn't it convenient to scapegoat corporations because no one's talking about the impact that government has on those very costs that she's alluding to? You know, again, this is the same in Canada and the States. What is gouging? What's your price there? What happened along the supply chain? Are you actually talking about grocery retailers? Because we know what their profit margin is. We just saw, you know, Walmart come out, for example. I mean, you're talking about profit margins between 1% and 3%. So what are you actually going to cut there? But are you talking about whoever transported, you know, the goods? Are you talking about whoever manufactured the packaging in the food industry? Are you talking about the farmers? You know, all along. I mean, it's just such superficial nonsense that literally makes no, I mean, it doesn't stand up to a moment of scrutiny. And it's a favorite, by the way. It's not just her. You're hearing that in Canada. You know, we have the new Democratic Party in Canada. Jagmeet Singh is the leader there. That's one of his favorite themes is the corporate greed and grocery prices. But again, it doesn't stand up to a moment of scrutiny. They can't even answer the basic questions. Like at what number is someone gouging and someone not gouging? You know, and again, which part of the supply chain are you alluding to when you're talking that way? And what about the track record? And it would go where she mentioned rents too. What about the abysmal track record of rent controls? I mean, that's not a controversial thing to say that they have failed. And price controls inevitably lead to less supply. You know, I'm just saying, I was flabbergasted. Those are such simplistic, unsophisticated statements.
Peter, I'll get your response.
Ditto.
I was just going to say, did I sugarcoat it? I just think the issues are so serious right now, you know, and that's not a serious response to them. That's an absolutely unserious response.
The first question I would say is just listen. So what were you doing these last 3.5 years? Okay, you were in charge of a border. Well, you never went to the border. You're in charge of the actual space program. They don't want to bring 2 people back down because they may die bringing them down because it would be impacted on her. And now she talks about things that she was the attorney general in. She may not want to bring up her attorney general record because there's a lot worse things there. Listen, first of all, let's understand, David, let's call it what it is. First of all, those aren't Trump's. A lot of Trump's views is Trump's views. Like him or not, that's his belief. she doesn't know the first thing about what she was talking about. If we gave her a test now, she couldn't even pass the typical financial test and all. So this is people who are ever behind it and whoever backed this and whoever was behind the change or whatever the case may be. And they gave her what there was to say. And even if she does win, these aren't going to be her personal driving factors. These are the people around her and help her win who's going to get across what they want to get across. That's the big difference here. Forget about ideologically for a second. One thing you know for certain, Trump's views are Trump's. That's what he believes, not because somebody's whispered it in his ear. And I'll take anybody that's enacting their own thoughts versus trying to be an actor for somebody else's thoughts.
Let's close.
David,
Yeah.
sorry. I just, it's not like, there's some policies that former President Trump is putting out that I would say, okay, I'd give a check mark. And there's other policies that I think are just as absurd. I'm talking about his love affair with tariffs, saying that the country who you're putting tariffs on is the one paying it. Come on. Fundamentally, you put a tariff on.
But by the way, he talked about lowering taxes and funding the difference with tariffs. Would that work?
Yeah. No, well, it'll work to make it more expensive for the consumer. I don't know where your net gain is. If I put a 10% tariff on a good coming from Mexico, well, you wouldn't with free trade, but let's say Brazil, you've just raised the cost by 10%. So you want
Michael, but his argument that, and I'm not a Trumpster, so I don't want anybody watching this thinking
no, good.
But the argument always was when he did that was when he talked to China was it was a talk to let him know that if you do that to get him to be more favorable to work in better conditions, not so much that he's just going to put blind tariffs and just keep them there forever. Again, what I'll just say is at least he brings a stability and a business conscious, whether or not you agree with his other thoughts and so forth. She has no demonstration, and clearly when she's been put off a teleprompter and asked questions, she has so little financial understanding and business acumen at a time when you really, really need somebody like that in charge.
And you do need a revival of the private sector. You can't have run up public debt and have a weak private sector, which is the one who pays the taxes, and you need those taxes to service that debt. I think they have to have they're going to be consequences. I don't have any hope that that's changing. So I'm just trying to prepare individuals for the consequences.
Well, let's close. We have a few minutes left. Gentlemen, let's close off on things you do like. I'm talking about financial assets, hard assets, or financial assets. Anything that you think may do well in this current environment or into the future, given everything we've discussed so far. Peter, I'll start with you.
Well, for 3 years, I was banging the drums for gold. I said back in the end of 2021 that it would.
Well, you've been right. It's 2,500 now. New all-time highs.
Yeah, so it did outperform stocks and bonds by 200%, meaning it's up 30-something%, and the stock market's up 12 or 15, and bonds actually lost money during that time. I don't think it's as attractive anymore, and it'll be more challenging to double again. But I will tell you, there's nothing changed on the horizon to suggest it can't keep going up. And we'll learn a lot more of how influential gold may be by what comes out of the BRICS in the fall. So gold would be the first. Another metal again that I like is copper. And then I think what really has to change for people is focus on capital preservation now versus capital appreciation. I think markets were easier for a whole generation. I don't think they're going to be that way going forward. And I think I go back to what I said earlier. A big pet peeve of mine is pay off debt, get out of debt, and live within your means. Make sure you're cash flow positive. If the government doesn't want to be, doesn't mean you can be unless you're going to start getting your own printing press.
That'd be nice, but unfortunately, I don't have one. Michael, I'm assuming you don't have your own personal printing press either. So what are you going to do with your money?
Well, I like Peter's emphasis on, you really have to review the risk you're taking. We have to appreciate, because of the debt situation in the credit markets, et cetera. And we've had lots of evidence of this. Look no further than the huge drop after the so-called carry trade, blew up, at least partially. So people have to recognize the level of risk they're taking, just broadly speaking, in any of the markets. Secondly, they'd have to recognize the speed of which things changes. Whether you're talking about President Joe Biden, whatever it was, June, and 2 days later or a week later, he's not the president any longer. Those are just typical of the level and rate of change we're asked to absorb here. So I think you have to appreciate that's the environment we're in. As I alluded to earlier, I think the biggest challenge for individuals is going to be protecting the purchasing power. That's why you invest. You want to end up with be able to support yourself more. So purchasing power is huge. I also think you have to decide, am I a short-term or a long-term kind of person when I'm looking? And a lot of times analysis talks like it's short-term. My thing on gold, for example, is you buy, and I've been saying it very clearly, though, since 220, buy on the dips. And 214 was the first time I really made it hard. You got to have a core position. I think post-core on top of that. So I still think gold and silver. I think Canadian oil stocks are still undervalued. But again, I'm looking at timeframes like 2 and 3 and 4 years out. So I do like Canadian oil stocks because you get the depreciation of the Canadian dollar and your production cost. Plus, I still think, oil's not going anywhere. So I mean, there's a whole bunch of stuff we can say about that. I'm just saying my personal opinion is I like oil. I consistently have said this for the last couple of years. I think it looks better than it was. I was looking longer term, short term, it worked out. I said, don't lock into any government debt. You keep it short term, you keep it under a year. I'm still saying that despite the fact, sure, in the next year, we may get some decreases in interest rates. The problem is government finances, though, and that should scare the heck out of people longer term. And that's on another whole interview, about that. But it's, real estate. The trouble is in Canada, we've seen this. It's been treated like a cash cow because where do people have money? The number one thing is governments are desperate for money. Where do they have their money? Well, I think they have it sometimes in pensions, and I think they have it in real estate. So we've seen a series of laws on the provincial level that have gone after real estate assets. And, Kamala Harris says we want to tax unrealized gains. Well, real estate's going to be where a lot of that lives, or a small business, of course, and of course, stocks for some people. But Peter's alluding to the environment of ever increasing taxes, I think is right on. They're desperate for our money. So let's keep inflating because that helps government and let's keep on taxing. So that's the environment I think people have to traverse. And it is a very risky environment.
Well, I truly appreciate both of you being here. That was honestly just a very, very good discussion. Very educational for everybody listening. So thank you for doing this. Peter, where can we learn more about you and your work?
Well, I'm well advanced in my twilight. I'm on Twitter and all, and I hope I can make this plug. If not, just take it out, David. Don't use it.
No, we'll keep it in.
I am coming back one more time to that beautiful city and behind Michael there, your hometown there, Vancouver. And I'm coming expressly to visit and see Michael Campbell one more time to speak at his conference. It's the single best conferences I was ever involved in. And Michael, I think you have finally found the young man to take your place that understands how to be right and fair and smart and being a financial media host. Even if he doesn't agree, he'll never know that even by facial expression. So, David, I really, truly enjoyed and was honored today to be part of this panel.
Yeah, this is a great panel. Michael, where can we learn more about you? Well, tell us more about your conference, Peter.
Yeah, the World Economic Conference will take place first week of February, and we are thrilled. Peter is finally back. But let me just say, the last time Peter was on, we were on about uranium, and Peter came on and gave us the big uranium yes and here and all this. Obviously, that worked out tremendously well because that was 2021 in February. A terrific call. So I'm looking forward to hearing. The audience is too. They're very popular. So that'll be great. But you can find, I do a podcast called MoneyTalks. So you can find Michael Campbell's Money Talks. You can find it on YouTube, but you can find it on podcast. Yeah, Michael Campbell's Money Talks. And I just direct people to our website, which is mikesmoneytalks.ca, mikesmoneytalks.ca. And welcome everybody. And David, it's been a pleasure as usual. Thank you.
Good. We'll put the links down below. Thank you very much, both of you, Michael and Peter. We'll speak again soon. And thanks for watching. Don't forget to like and subscribe and protect your online privacy. Click on the link down below in the description. Join deleteme.com/David Lynn or scan the QR code here for 20% off.